In this episode, we're doing something a little different. Rather than interviewing a founder who's run a successful campaign on WeFunder, we're talking with Brian Belley, the CEO of Crowdwise.org. Crowdwise is dedicated to providing education and resources for people who are interested in learning more about regulation crowdfunding and getting started with angel investing. Brian shares our enthusiasm for a world where ordinary people, not just millionaires and billionaires, can invest in startups they love. Here's Brian. So, Brian, it's a pleasure to have you here with us today.
Thank you very much, Johnny. I'm very happy to be here and talk with you guys.
Awesome. And maybe you could start by telling us at a high level what Crowdwise is.
Absolutely. So essentially, I founded Crowdwise to be an education website. And my main mission with it is to help new investors basically just learn the skills and get some of that initial knowledge required to really make their first or even, say their 20th crowdfunding early stage investment. So at least today, where Crowdwise kind of stands is there's primarily a focus on regulation crowdfunding. So that's, referred to as Reg CF or Title III of the Jobs Act. But what I try to do is take, a bunch of lessons from angel investing, venture capital, private equity, literally from dozens of books, courses, and hundreds of online resources that I've used for my own personal crowdfunding investments. And I'm trying to boil down what is essentially useful for the new crowdfund investor that wants to get started. So, if you go back to kind of what the genesis of Crowdwise was and why I'm doing it, I think you could say that really it was born out of my personal struggles and kind of my own personal lessons and frustrations when starting out investing myself. Because, just so everyone's aware, right, I'm an unaccredited investor. And that means basically, not one of the uber wealthy people who had the exclusive access to invest in some of these deals in the past. So I'm basically looking to share my lessons, whether it's the good, the bad, the ugly, with the hopes of helping other investors out there.
Brian, what is your background? How did you first get involved with angel investing? And maybe if you could talk about before the Jobs Act and before Reg CF became legal, what your experience with angel investing was versus now.
Sure, and that's a great question because it should probably be clear to everyone that I'm definitely not from a finance investment related field or background. I haven't worked even at startups myself. So my formal training is actually as an aerospace mechanical engineer. I got my bachelor's of science and my master's as well in aeromechanical engineering. And so for roughly 10 years, I was working a full-time job, the 9 to 5 or more like maybe an 8 to 7. And in my spare time, I would volunteer a lot with different organizations related to STEM and kind of education. So like FIRST Robotics. And really it was investing on the side that was my passion. So I'll tell maybe a funny story. If you think back to when you were 8 years old and Christmas morning, right? I think most kids ask for a whole bunch of different types of gifts. So maybe it was a skateboard or a dollhouse or all these different things. Well, as an 8-year-old, I can specifically remember, going into the living room the morning of Christmas morning, and instead of boxes with bows and, maybe the standard presents you might expect, I had a stack of envelopes. And I was ecstatic because what those envelopes were actually U.S. government savings bonds that I had basically been asking my family, everyone, all my relatives. I was like, I don't want gifts. I want savings bonds.
That is probably the geekiest 8-year-old story I have ever heard. That's amazing.
Thanks. I'll take that as a compliment. But, I don't know where it came from, but I've always had this investment passion. So, it's obviously evolved since then. I'm not necessarily, asking for savings bonds for Christmas anymore. But started investing in the public markets just, again, in my spare time and throughout college. And, definitely that was probably around the mid 2000s. So obviously getting into, the 2008 time frame and global financial crisis, I got some good lessons in investing that honestly, I think set a lot of the foundation for what my investment philosophy and psychology is today. So you can think, right, most of the public equities at that time had, a 30% plus hit when everything was kind of dropping. And so what that really led me to do in the coming years was look for alternative investments, ways to diversify my holdings without necessarily sacrificing gains, right? So trying to look at non-correlated assets outside of just traditional stocks and bonds. So that kind of evolved, and I started experimenting with some of the peer-to-peer debt crowdfunding loans. So on sites like Lending Club or Prosper, some crowdsourced real estate in there. But it was really about a year and a half ago, and I had always been hoping for a way, right, that I could invest in some of these exciting early stage companies, but due to the law and SEC and regulations, it was off limits. Well, I guess it was early 2018. I just was looking online, and I had actually been on a phone call with one of my friends who is, they do some work in like venture capital related things. And I was just expressing to him, I'm like, why can't we as non-accredited investors invest in these types of companies? I understand, trying to protect the investor and the regulations are there for good reason, but, it feels like that it's just out of date. So basically, after the call, we hung up and I went to look again because I was like, I haven't looked in a while. I should check. And that's when I came upon this thing called equity crowdfunding. So it's been around since May 2016, as many people know. And basically from there, I just spent the next few months reading as many VC, venture capital, angel books, taking courses, and trying to teach myself as much as I could. So
that's awesome. And you kind of touched on this already in what you just said, but why are you so excited about regulation crowdfunding, about enabling ordinary people to invest in startups to the extent that you started this company, Crowdwise, to educate people and get the word out? What's so exciting to you about RegCF?
Yeah, it's a great question, because I think on a purely emotional level, right, as I was saying, this is the first time since essentially the 1930s that every day or these so-called Main Street or retail non-accredited investors can support the businesses and ideas and founders that they really believe in. So, it may have been possible with a few special, rare exceptions in the past, but for the most part, it was off limits. So this is really starting to bring, kind of the capital markets up to this 21st century, internet kind of crowdsourced social media state that we're in today. And when I think about what excites me about it and, other people, what they could be excited about, I think that I can typically think about it by breaking it into sort of 4 categories where, each of these is almost along a different axis of what one of my primary reasons for investing is. But I basically refer to them as 4 different things. So first, there's the capitalist, right? And this is the investor who wants basically purely financial appreciation. So how can I either gain diversification in my portfolio, get some of these non-correlated asset classes and look to diversify and, maybe get some different gains. Mm-hmm. So that's kind of the capitalist, right? That financial person. And that's definitely a big reason of why I personally invest, through some of these companies in equity crowdfunding as well. Mm-hmm. But that's just one reason. There's all these other reasons to invest, right? So another one that I like to think of, I kind of refer to as the shaper. And these are the investors who really want their investments, right, to contribute to the social good. So having benefits beyond just the pure monetary value of their dollars, it's how can I help, create a better future, or how can I help bring something into the world that I want to see? That type of thing. But then the other ones, right, there's obviously I call it the third one is kind of the pupil. So this is the person who's maybe looking to build up their business acumen, network, participate in this innovation and really have a sense of belonging that, they're kind of learning what and also feeling like they're a part of that team, which you definitely get. That's a huge part of crowdfunding. And then lastly, I refer to the fourth kind of stereotype, or not stereotype, but the fourth mindset of why it's potentially beneficial as the thrill seeker. And this is the person who, right, it's exciting to invest in early stage companies and be a part of something that's changing the world and really maybe it's on the cutting edge of technology, or, maybe it's investing in your favorite football team, like I know you have, Johnny. So
Chattanooga FC.
That's right. So,
Nice.
it's, yeah. there's a lot of reasons to be excited. And I think that it's, each investor is a little bit different that's out there as well, but I think everyone has some kind of blend or combination of those different motivations behind it.
Yeah, I really like these persona descriptions. I think they match up really well with the types of companies who we see do well on the platform as well. I'm curious, what do you see as the biggest potential challenges for some of these different personas as they're getting started with investing, or maybe people who already have a really big portfolio for Reg CF?
Yeah. Speaking from personal experience, I think one of the biggest potential challenges right now is just how to manage this in terms of time. So what I mean by that in saying time, right, is that especially for non-finance, related backgrounds, there's a whole new vocabulary of, valuation caps and discount rates and looking at the deal terms, and it's a lot to learn and take in at first, which is part of my reason that, I'm trying to basically boil down my key lessons that I've learned throughout my investments over the past year and a half, and then share that because I kind of saw a lack of that out there to help new investors get started. But, another potential challenge I think people are going to run into, and it's probably more focused on, again, that kind of capitalist persona looking to, gain financial returns. But if you look at, for example, some angel investment studies, there's a couple studies I think that were done in the 2007-2009 time frame that looked at over 1,100 angel exits, and it was trying to take a look and basically answer the question, how does due diligence time impact, potential angel investor returns? And the conclusion, of this one Wilt Bank study, at least that I'm thinking of, is that it essentially said that more hours of due diligence positively relates to greater returns. So they kind of broke it down in this, say 20-hour kind of time frame where the investors who spent more than 20 hours of due diligence on a deal saw significantly correlated positively greater returns than those who spent fewer than 20 hours. So I think one of the challenges that both the investor and the industry is going to have to kind of think about with Reg CF is, for the people that want to have positive financial returns, how can they make that more manageable? Because for the investment amounts that most typical investors will probably be investing, say in the $100, $500, even, $1,000 range, it probably doesn't make sense to spend, 40 hours plus of due diligence on something that, even if it 10x's, for example, it just makes you a couple $100. It's not worth the time of doing that. So I think that that's one of the potential challenges that, the investors that are at least looking to make money are going to have to overcome. In addition, I think that there's some challenges for the industry as well, right? Because I think that, depending who you talk to, but there are some potential shortcomings, or some people believe that the regulations as they stand today, right, could be bettered. So that's where, they might want to, for example, increase this 1.07 million funding cap, or other things that they think may attract higher quality and more issuers. And then obviously, if you have more higher quality or more issuers, which are the companies that are raising on the platforms, then you can attract more investors. So I think that's another, potential challenge that the industry will be looking to overcome in the coming years.
Yeah, I think all of those points are really excellent, and they're issues that we wrestle with as a company every day. I guess stepping back, though, you must be optimistic about Reg CF, about allowing ordinary people to invest in startups. So you must be optimistic we can tackle these challenges. I guess for a skeptic, you might say, someone yourself, you didn't have a finance background before you got into this. How can an ordinary person be expected to achieve the same kind of financial outcomes, to be able to make these kind of investment decisions versus someone that's a finance expert and spends their whole life researching this and looking into this?
That's an excellent question, right? And one that even I have been struggling with and reflecting on myself. So I would think, to start out, one of the most important things probably is for, just reflecting on what your goals are as an investor and making sure that you're being realistic. So, if you're not planning on spending lots of time on due diligence and, we still have perhaps some of these regulations to overcome, realistically, you're probably not going to get the types of returns that, for example, the most dedicated, super angel investors are getting. So writing down your investment objectives up front can help to at least make sure that the companies that you are investing in, that it's clear, what you're expecting from that. And I think a lot of times, there's probably a lot of investors, and you guys can probably comment on this, from a WeFunder perspective, but I imagine that there's probably just as many people investing because of the other aspects outside of just the financial returns, where they want to be a part of some of these exciting companies, to participate in the innovation and the new technologies. But beyond that, some other maybe thoughts in terms of how some of these investors, to your point, could do it, or I guess taking from some of my own things that I've done over the past year. One other potential suggestion that I implemented for a little while, and I actually did this probably screening dozens of investments before actually making my first Reg CF investment, is I kind of created, call it a fantasy crowdfunding portfolio, right? So for anyone that's familiar with fantasy sports, it's kind of picking and choosing, and you're not actually having, your money on the line, but you can start kind of looking at these companies and maybe asking some of the questions that you would ask if you were actually going to be investing.
Yeah.
And then seeing at the end of that campaign, where did they end up? Did they meet their funding goal? Was it really popular with other investors, which is perhaps an indication, right, that you were along the right lines, or maybe it fell short and just didn't catch on, and what were the reasons for that? So, I think that especially when getting started, make sure that you're taking your time. Another thing, to your point,
I love
right,
that idea, by the way.
Yeah.
Before you go on to that idea,
Yeah.
I had that very idea the other day of a crowdfunding fantasy portfolio. Obviously, it's going to take a long time for you to realize what your IRR and returns are going to be. But I really would love to collaborate with you on that, because, I want to play. Because I'm not an accredited investor. I've made a few WeFunder investments myself, but that would be a really cool way to, I think, just kind of, especially folks that don't have the disposable income or want to kind of dip their feet into it. I love the idea.
Thanks, but you hit on the downside is that with the average exit for angels maybe taking in the 5 to 8, sometimes years longer range, it would be a very long fantasy game to play with your friends. So,
So Brian, just to totally back up on what you were just saying, I think investors oftentimes on WeFunder will invest not because they are an expert in the sector or they've done a ton of due diligence, but because they really know the founder. And for me, going back to the question I asked, that's one thing I'm very optimistic about, is that sure, investors on WeFunder might not be finance experts. They might not even be experts in that sector. But if you grew up with that founder, if you've seen the tenacity and the drive and resilience that they've exhibited throughout their whole life, then, when you talk about 20 hours of due diligence, 40 hours of due diligence, in a sense, someone that's known that founder their whole life has done, many more times that, the amount of due diligence. So one of the things I'm optimistic about in terms of investors and returns they're able to generate on a platform like WeFunder is that the kind of maybe lack of financial expertise is compensated for by, how deeply they know some of the founders they're considering investing in.
No, that's a great point. And just to build on that, right, I think another potential advantage that, say, crowdfund investors have is where in the past, right, these private angel deals were really exclusive, right? It depends on your network, and they call it the deal flow. Who are the founders that or the other angels in your network that are sharing deals with you? Well, now, these deals through Reg CF are being posted for anybody to look at online. And because of that, you probably have many more sets of eyes looking at the business,
Mm-hmm.
people from very diverse backgrounds, all walks of life, asking questions of the founders. And you may be actually getting, in some sense, more of a crowd due diligence depth because of
Mm-hmm.
all that exposure that would not have been there when, the deals were really restricted and held private. So
That's a
it'll
great
be
point.
interesting. It'll definitely be interesting to kind of see how it evolves as we move forward.
Yeah, that is a great point. I think one of the things that we advise investors, so obviously we are working with a lot of unaccredited investors, and we really want to try and educate everyone in what they're getting themselves into, essentially, and the risks associated with investing in startups at this stage. And we typically advise people to invest in industries that they're familiar with or companies that they are very passionate about. And encourage people to support the company after they've invested by, I don't know, sharing their product launch with their friends and family, or visiting their new brick and mortar location once it opens. It varies, right? But to what extent do you think that these new unaccredited angel investors should be getting involved with the company post funding as investors in how deeply they're supporting the company going forward?
That's a great point, because I think, one of the common, whether you want to call it criticisms or potential downsides, right, is that a lot of the investors through regulation crowdfunding may not have as much access to the founder or the startup team as, say, an angel investor would, or a venture capitalist who's maybe sitting on the board, right? So it's often, I think, the question that comes up in my mind is, how am I going to be able to add value? Is this really just I make the investment and I forget about it? Or are there ways that you can still interact and have value? And speaking from personal experience with, some of my investments already, there's been oftentimes, you'll get email updates from the founders in the same sense that angel investors or venture capitalists would. And a lot of times the founders are asking for help. So they have, requests for support, whether it's trying to get introductions to, certain types of people in the industry, in their particular industry or market that may help, looking for ideas about how they can spread the word. And so just to give a couple examples, I can think of one company where they had been trying to figure out how to get the word out of what they were doing. And I had recently listened to a podcast that was relevant to the topic they were on. So not that I knew, the director or the people who produced the podcast, but I told them, hey, maybe you want to reach out and see, I think that the audience that this podcast has would be really relevant. And, I get the direct interaction from the founder. So they replied and they're like, oh, that's, fantastic. We're absolutely going to do this. I think that would be perfect. And, that's one example, but there's other ways where the founders I think are finding ways to still leverage the crowd without necessarily having to answer to, 1,000 different masters or 1,000 different investors, all with their different needs. I've seen some of the founders send out, surveys of, something about their product or something about their service or something else, where you can get some input from, hundreds or potentially even thousands of your investors about what might make sense. And so I think that, staying involved, it definitely varies depending on the company. And I've seen kind of a wide range, but I think that the companies that I've invested in are definitely starting to show that they're trying to figure out the best ways that they can leverage their investors. And so I think that there are going to be a lot of those opportunities moving forward.
Mm-hmm. For someone that's interested in dipping their toe in the water of unaccredited investor crowdfunding, they're kind of intrigued by this idea of becoming an angel investor, maybe for as little as $100. What advice would you have for them about how to get into that? Anything that they should be researching or thinking about?
Yeah. So I guess a few things in terms of maybe potential resources that I found helpful when I was starting out and that I continue to use to this day. So first, I think we've already been talking about this, right? But leveraging the power of the crowd. So, often people will talk about the wisdom of the crowd and how it can be more intelligent than individuals. And so for someone that's looking to get started, just going to offering pages, if, you create an account on WeFunder, you don't have to invest on day one. And in fact, it's probably best to not invest right from the start. You want to try and get familiar with the types of offerings and the types of businesses first, but start reading through the comments, because you'll start seeing the types of questions that other investors are asking. And that's been a fantastic way to, kind of pick up like, oh, I didn't think of that, or, oh, I didn't realize it might impact the business in that way. I think that's been a great way to learn. I guess in addition, for someone else, I'll just give another little self plug here. But so at Crowdwise, what I've been trying to do is put together some free investment courses as well. So basically starting with the basics, for someone that's just really getting into what is, diversification and asset allocation, how does this maybe fit? And then starting to actually get into the specifics of, what is regulation crowdfunding and Title III of the Jobs Act, and, what are early stage companies, and, the different things that investors might be interested in there. So I think those are a couple tools and resources, to be able to use. But other than that, I also, have been reading a bunch of books. So there's a lot of books out there, not so much on equity crowdfunding yet, but there's obviously been a lot out there for venture capital and angel investing. So those are some great ways to at least start thinking like, the early stage type investor. And yeah, I would say that.
One question, Brian, you talked there about kind of resources that people could go to learn more. And just for the listeners, what would be your top, 3, 5 tips on how to get started? Are there some kind of very basic principles that you would recommend all investors to think about?
So I would say I'll take a step back first, and maybe I can kind of just describe a little bit of my process for how companies even make it onto this decision sheet where I decide to evaluate them. So really, to start out, going back to that concept of leveraging the wisdom of the crowd, usually what I'll do is just to help filter through, just the sheer number of deals that are out there. It would be, nearly impossible for anyone with a full-time job working 9 to 5 and just trying to invest in their spare time to screen every single new deal when it gets posted. So typically, what I actually did for myself is I started on a website. Well, I started at WeFunder, it's one of the biggest Reg CF portals out there. And I usually will once a week or maybe every other week go and take a look at the deals that are posted. And my first filter of kind of companies that I'll look at is basically saying, which companies have momentum or have, exceeded their minimum funding goal and have lots of investors. And my main reason for this, is that it helps me kind of use that and leverage that concept of the wisdom of the crowds. But in addition, it helps me to not necessarily look at every single deal that's out there. It helps kind of just narrow it down to some of the biggest few. Now, one of the reasons, if you ask, why do you depend on the wisdom of the crowds, right? Because we know that the other side of that coin is the wisdom of crowds can be the madness of crowds, right? With bubbles and everything else. But, what I kind of tend to think of using that as my initial screen is that, first, there's going to be a larger number of eyes on that deal for due diligence. So kind of that concept that I was talking about where you have all these different people from different backgrounds asking questions of the founder. So it already has kind of a lot of the due diligence there, where I might already have a question answered, and then I don't have to waste more time, asking the founder for something that has been answered by someone else. Second, based on those responses to the investor questions, I found that you can learn a lot from the founder and the startup in terms of how they communicate as well as how they can sell and market. Both of those skills, which are obviously vital and crucial for both marketing and selling their product or service, but also down the road, if they need to raise additional capital, with angels or venture capitalists eventually, it speaks a lot to the potential success that you might expect having a founder and a team that can really communicate that vision clearly and talk well with investors. And then in addition, basically after that, so that's kind of my first filter of, what companies am I going to screen? Okay, these are some of the biggest ones that seem to have some good momentum, that seem popular. Let's do the next level. So the next level is really kind of just a gut check for myself. And I think going back, I forget if Johnny was mentioning this, but it's essentially saying, is this a problem that I can get excited about? and something that I can understand. Now, this doesn't necessarily mean for me personally that I'm an expert in that industry. I kind of depend on some of the crowd for flushing out some of the really specific issues. But if it's something that I can really get excited about or see the potential for, that's a good indication that there's a real problem that's being solved there, and that, there's good potentially for the business moving forward. So then that's really when I get into, okay, it kind of passes the wisdom of the crowd's filter, passes my gut check. Now let's bring it on to my spreadsheet. And I break it down to when I perform my own due diligence. There's a whole bunch of different methods out there, right? And you can read countless books on different ways to do due diligence, but I try and keep it relatively simple and use something that's commonly referred to, I think, as the 4 T's. But I basically look at the team, the traction, the tech, and the terms. So team, the founder, do they have relevant startup industry experience? Who are their advisors, if there's any? And, are they relevant and actually adding value? How's the founder's communication? Again, looking from those from the question and answers with the investors. And, why is this the right founder or the right team for this specific problem? So that covers number 1 on my spreadsheet, which is team. Number 2 is traction. So this is really, with their product or service, are there current users? Are people paying for this? Are they seeing growth? Is there evidence that, they're solving a real problem and that people are willing to pay for that? And then, what's the potential market demand moving forward? So number 1, team. Number 2, traction. Number 3 is the tech. And again, this may not apply necessarily to someone if you're investing, in more of a food and beverage or other company, but for my style of investing, and the type of businesses I'm investing in, they're usually some type of technology that's underlying their business. So I look at the tech and say, is this 10x better than anything else that's out there? What is the competition, if any? How is this potentially defensible? Why wouldn't, a much bigger business that's out there with much more capital and many more resources come in and just squash them? So team is number 1, traction 2, tech 3, and last is terms. And that's basically get into, what's the valuation or the valuation cap discount? What's the type of offering? Is it a equity or debt? And then, just looking at some of the specifics, getting into are there repurchase rights, for example, which some of the safes have, and different types of securities. Now, I will say, going back and looking at some of these, I probably was much looser in the beginning compared to how I would be now. And not speaking specifically to this deal, but that's one of the things you'll kind of notice, I think, by having this investment decision log is, your process evolves over time. Mm-hmm. And so there may have been some investments looking back at now that, I don't fit squarely within that 4 T's framework, or maybe don't check the boxes as well as something I might be looking at now. But again, I think that's because, it just comes with experience. That's why going out on some of the funding portals and just starting to look at deals without actually making investments will start giving you some of that confidence.
Well, I feel like a great note to end on. And, when you're in this world of MVP and lean startup and kind of rapid iteration and learning and prototyping, I feel like RegCF and unaccredited investor platforms like WeFunder give you a chance to test out your investment strategy for very cheaply, right? So rather than having to drop a 10K check to learn those lessons that you've learned over the last couple of years since you started doing this, you can learn those lessons for even $100 at a time, and thereby more kind of cheaply and rapidly iterate on your learnings about how best to do this. So Brian, thanks so much for joining us today. It's been really cool to learn a little bit more about your own background and get some ideas and advice for potential investors that are listening. For those that are listening, if you want to learn more about Crowdwise and check out some of the resources that Brian and his team have put together, check out crowdwise.org. And yeah, Brian, thanks so much. We'll, I'm sure, be seeing you around and staying in touch, not least to put together that fantasy investment collaboration.
Sounds great, Johnny. Thank you very much. It was great talking with you guys.
Thanks so much, Brian.
Thanks again.
Adventure Capital is brought to you by your fundraising team here at WeFunder, which consists of Johnny Price, Katie Powers, and myself, Oliver Foyahan. We'll be sharing the adventures of one of our WeFunder founders every other week. If you have any comments, ideas, suggestions, or would just like to find out more about WeFunder or our founders, Don't hesitate to contact us at hello@wefunder.com. We'll see you next time.